SanDisk is experiencing a sharp parabolic rally as anticipation builds around a potential AI driven memory supercycle. The surge is being fueled by tight NAND supply and substantial price increases for enterprise SSDs, driven by soaring demand from hyperscale AI infrastructure. Investors are betting that SanDisk, a major flash memory provider, is perfectly positioned to capitalize on this unprecedented wave of spending in AI and data intensive applications. The stock has already jumped 63% in just the first 9 trading days of 2026, reflecting the extraordinary speed of the rally and the excitement surrounding memory plays in the AI boom. Its gains have mirrored movements across the broader memory, data storage, and semiconductor sectors. This includes Taiwan Semiconductor Manufacturing, TSMC, which recently beat earnings expectations and guided for significantly higher capital expenditures in 2026 than analysts had forecast. Many investors are interpreting TSMC's bullish outlook as a strong signal that the AI memory trade is set to continue accelerating, which has lifted sentiment across related stocks, including SanDisk. SanDisk has been one of the most prominent beneficiaries of the AI memory trade over the past year. Following its spinoff from Western Digital last February, the stock has gained nearly 1,000%, highlighting how AI investments are reshaping demand for flash memory. Surging memory prices, particularly in enterprise grade SSDs used for AI training and inference, have further reinforced SanDisk's pricing power and investor appeal. Wall Street analysts are struggling to keep pace with the stock's meteoric ascent. Barclays analyst Tom O'Malley reiterated an equal weight rating on SanDisk shares, but boosted his price target to $385 from $220, noting the company's robust fundamentals and strong positioning in the memory market. This is a dramatic increase, considering that just last November, Barclays' price target was $39, reflecting how rapidly the market's perception of the company has shifted. Despite the surge, there's a noticeable disconnect between market enthusiasm and analyst consensus. Two-thirds of firms polled by FactSet rate SanDisk the equivalent of a buy, yet the average price target remains $340.50, even as the stock trades above $400. This gap highlights how quickly the stock is moving and underscores the difficulty sell side analysts face in adjusting valuations in a market driven by fast changing AI demand dynamics. Some
Sorry, the stock is not trading obviously at 400. It's yeah. Oh, sorry. Yeah, it is trading at 400. Oh, sorry, sorry for yeah. It is over to 400 already. Yeah, sorry.
investors are understandably cautious. Short interest in SanDisk has ticked up to 6.4%, signaling that a portion of the market is hedging against the possibility of a pullback after such rapid gains. The trading community is now intensely debating whether the current surge is sustainable, fueled by structural shifts in AI memory demand, or whether the stock is overextended and ripe for a correction. Ultimately, SanDisk's rally exemplifies the intersection of AI driven technology demand, tight supply dynamics, and investor speculation, creating one of the most dramatic early year stock moves in memory and semiconductor markets. Whether the rally continues or faces a pause, it has already solidified SanDisk as a marquee stock in the ongoing AI memory supercycle.
Yes, the stock is has crossed $400 now. This is Thursday, the 15th of January, 2026, up 3.92%. Short interest has increased of late to around 6%. Easy to borrow, not a problem. 50-day average volume is usually 12 million. Okay, does it look like we're going to do that today? Let's see whether we can see what option traders are doing for January 16. I doubt if there's anything there. Nothing here. Market makers are not um, are not active here. Sometimes the average volume gives you an indication of the sort of it just gives you quickly gives you what an impression as to whether market makers are involved heavily. 12 million, not really. No, they are not. I can't say they're not involved. So the 4 hour chart is indicating that yes, the strength it has right now may remain in place up till at least the, let's just say, 22nd of January. That's almost 1 week from today. Then after that, there is also the prospect of it contracting this expansion. It has been on right now. Momentum is expected to remain flat, but it doesn't mean that high prices won't continue to print. The 40 period moving average on this 4 hour chart is also expected to continue to rise to act as a support in the event of a pullback. On its daily chart, we don't have any, that it hasn't, obviously, you probably heard, it was just spinned off last year. No extrapolations here. So projections are currently saying 290. It's a down projection. It has exceeded that already. I doubt if we're going to see anything fantastic on its weekly chart, but we'll have a look anyway. No projections here, nothing at all. It's a downward projection. There are projections here, but they are downward projections. It is a downward projection. Okay, what we can do now is to see if we can find the use the market grid to find out possible prices for the stock for, yeah, market grid. Let's see. So let's see what we have here. We have between 420 and 393. Okay, 420. So it's currently at 403.7 and pointing down. So there's a chance that you might retest. You might retest all the lows of around 393.04, but the lower it gets, the better the buying opportunity is. The lower it gets, the better the buying opportunity. There's a chance that it might test 420.96, if not today, at some point. And especially given the fact that the extrapolation seems to be suggesting that it may hold the strength up till up to next week, the 22nd. There's a chance that 420 would be met. Okay, so this is the daily charts. Okay, yeah, it's still valid, still very much valid. So this is what happened yesterday. The algos seems to be, they knew, as if it knew that this was going to happen. It has the grid is already intact, still very much relevant. This daily chart is not reflecting, it's not active at the moment, but its grid is the market grid is very much active, very much relevant. The stock is currently trading at 403 or thereabouts. So this is where it is, just between below the R2 and R1. Okay, so 404 is something that can happen. Yeah, 420, 419, those, you don't count them out as things stand right now. Any buying, any dip in price will definitely provide a good buying opportunity, which is what we have here. It's saying that by Monday, the upper Monday, the 26th, there's a chance that it may start to pull back. That will definitely be a very good buying opportunity. 1 hour chart. Let's see what it's going to indicate. The 1 hour chart has since contracted. It hasn't not has gone conservative. You can see the projections here are a lot more, a lot more yeah, a lot more narrower. We have here 411, between 411 and 402. Yeah, so yeah, the lower it prints, if it pulls back, yeah, here on this, on its, I think where is it now, 403. Yeah, this is where it is now, 403.98. So it is providing on, this is what some traders are watching. They may be watching this and getting ready to get back into the stock right now as things stand. So just let's see how all of this will pan out. Okay, thank you very much for watching this video.